Welcome to CEF Insights, your source for closed-end fund information and education, brought to you by the Closed-End Fund Association. My name is Diane Merritt. Today we are joined by Sanjai Bhonsle, Chairman and Chief Executive Officer of StoneCastle Financial Corp. We're happy to have you with us today, Sanjai.
Well, thank you, Diane, for having me here today, and I look forward to our conversation.
Sanjai, StoneCastle ArrowMark focuses on income solutions and has a highly experienced team. Can you give us some background on the firm and your investment team?
Sure. ArrowMark Partners today is a Denver-based asset manager that manages around $22.5 billion of assets. This AUM is spread across various strategies that range from fixed income to equities. So, for example, if you look at our fixed income strategies, they range from leveraged loans to lending related to banks, real estate, and healthcare. ArrowMark is a client-centric firm. We are focused on solving our clients' needs first. We have a 10-plus year of operating history with a team of seasoned professionals that have managed capital through various economic cycles. About a year ago, ArrowMark took over the advisory role for StoneCastle Financial, or SCFC. Since that transition, StoneCastle Financial has benefited from the broad resources of ArrowMark Partners, which includes both research and operations-related resources. As such, since the transition, StoneCastle has both increased its investment portfolio along with out-earning its quarterly dividend.
Your team manages StoneCastle Financial Corp, symbol BANX, which invests primarily in bank-related securities. What are the characteristics of this sector, and what are the attributes of the sector that may benefit investors?
Good question. So if you look at SCFC today, it has investments related to both small banks, which we would define as community banks, and to large money center banks. We define community banks as banks with less than $10 billion of assets. Community banks also exponentially service small businesses in rural markets. They also have meaningful expertise in the local markets they serve. In terms of large money center banks, the investments we purchase there are regulatory capital securities issued by these large banks to manage their regulatory capital needs. These securities are generally backed by investment-grade credit and usually floating rate in nature, which is beneficial to SCFC in a rising rate environment. As it relates to the attributes of these investments that are beneficial to SCFC investors, I would say the portfolio today is exposed to a sector that is poised to benefit from the U.S. economic expansion, which we are seeing today. During the height of the pandemic, risk premiums blew out. Since that peak, risk premiums have contracted due to the Fed intervention, vaccine rollout, all of which has supported the consumer and has allowed the economy to open up. The banking sector is going to be one of the prime beneficiaries of this economic expansion. Think rising rate environment, which benefits earnings growth for banks.
StoneCastle's investment mandate and your approach are interesting in the scope of investments you consider when building the investment portfolio. A couple of questions. What is your process to evaluate your investment universe, and how do you and ArrowMark select potential investments or specific credits? Also, what is your portfolio management process for the company? How does this fit in with the broader ArrowMark platform? And are you finding valuations in the sector to be at attractive levels in this current market?
Sure. In terms of how we evaluate our investment universe and how we select potential investments, it all begins at our research phase and our initial view on macro and portfolio needs. Today, we source investment ideas for SCFC both from the primary and secondary markets. Each investment idea goes through a rigorous diligence process that involves intensive financial analysis, along with in-depth discussions with management teams as part of structuring a particular investment and evaluating if we are getting paid for the risk we are taking. Any investments we make is done with taking downside into consideration and what our losses could be in a negative environment. Our focus is on capital preservation first and then income generation. In terms of our portfolio management process, we are bringing both fundamentals and analytics to play. When we are looking to buy an investment, that is done in consideration with what the portfolio needs are in the short to medium term. Once we own an asset, there's meaningful amount of monitoring on a monthly and quarterly basis, which involves analysis of whether a particular investment still aligns with our initial investment thesis. When we are looking to sell an investment, it is done from a relative value perspective and also when we are looking to mitigate risk in the portfolio. At the end of the day, we want to optimize yield to deliver risk-adjusted returns. And then finally, in terms of valuation, it has been a very interesting 12 months or so. I'm glad to say valuations have rebounded to pre-pandemic levels in both the community banking and regulatory capital sectors.
Sanjay, the Federal Reserve and the federal government have made significant policy initiatives to stimulate the economy, and more seems to be on the horizon. Recently, we have also seen some increase in longer-term interest rates. Again, some multiple questions. Where do you see the banking and credit markets currently, and what is your outlook for the rest of 2021? Also, what do you see as the advantages of investing in StoneCastle Financial in this particular environment and with the company's particular style of active management? And where are you finding the best opportunities among bank-related securities in this market?
Well, Diane, I'm actually very happy you asked this question. I'm very excited for the banking industry as a result of the intervention by the Fed and where we stand today in terms of economic expansion. Banks are poised to benefit from this. For example, as rates rise, this helps bank loan books as new loans are made at higher rates while deposit rates lag. This leads to an increased NIM or net interest margin. Also with economic expansion comes lower default rates, which further fortifies a bank's loan book, so write-offs should decrease. This all should theoretically lead to earnings growth for banks and a decrease in their perceived risk premiums. All of this is advantageous for StoneCastle Financial as its portfolio has exposure primarily to the banking sector. Since the transition to StoneCastle Aramark as advisor, we have grown the portfolio and at the same time have out-earned our dividend every quarter. This, coupled with favorable tailwinds in the banking sector, the risk premium for SCFC should also contract. So today, with that lagging, coupled with SCFC delivering around an 8% dividend yield, which we believe is rich relative to the risk premium for the banking sector. Also, close to 50% of the portfolio is in floating rate assets, which should further benefit SCFC's net income in a rising rate environment. In terms of best opportunities for banking-related investments, BANX evaluates a wide range of banking-related assets to meet the criteria of the portfolio. Currently, we believe the regulatory capital securities are best suited to optimize the portfolio as these securities are generally being created around a 10 to 12% gross yield. When community banking spreads do come back into a normal range, today they're currently being issued around a 4 to 6% range, the community banking space will be available to meet the investment criteria of our portfolio.
Sanjay, BANX is a reasonably unique investment product for investors. How do you see an allocation in a banking-related portfolio, income strategy as being best positioned in an investor's diversified portfolio? Also, how do you see an allocation strategy for an investor that is more income-oriented?
Yes, so for an equity investment portfolio, say you are an equity portfolio manager there, StoneCastle Financial can be incorporated into a value-oriented portfolio or as a closed-end fund investment, which is typical of the closed-end funds association investor. There, your investors can earn nearly an 8% dividend yield in a high-quality, majority investment-grade portfolio with a consistent and stable NAV. And then banks can also be considered for a fixed income portfolio. The underlying portfolio of banks, for the most part, is debt. Think term loans, sub-debt, etc. It is a fixed income portfolio in an equity closed-end fund investment structure. Your investors there will also earn a close to 8% dividend yield in a majority investment-grade portfolio with a consistent and stable income generation to meet spending needs of foundations, endowments, and such. And then finally, looking as an income-oriented investor, whether it be an equity or fixed income allocation, BANX generates a consistent 8% type dividend yield. When benchmarked against other income-oriented investment vehicles, like the Barclays, Bloomberg Aggregate Corporate Debt, or the KBW Banking Index, or additionally the S&P Select Financial ETF, BANX is delivering approximately a 500 basis points of incremental dividend yield from those I just mentioned.
Sanjay, thank you so much for taking the time to join us today.
No, thank you for your questions, Diane. At StoneCastle Financial, we pride ourselves on the company's transparency and access to management. We hope to do more of these type of events in the future. Thank you for your support of StoneCastle Financial Corporation.
And we want to thank you for tuning in to another CEF Insights podcast. For more educational content, please visit our website at www.cefa.com.